What's going on, everyone? Today, the SPY and the NASDAQ both made new all-time highs today. Clearly, the NASDAQ has been in an uptrend for the past month and a half. So in today, we're going to talk about the overall indices, the stock market, the crypto markets, the dollar, crude oil, gold, silver, all of the other stocks that you wanted me to do technical analysis on, as well as a trade that is a 100% success rate. So I'm going to talk about all of that in today's video. So let's get right into it. Also, if you guys like the content that I post, please, all I ask of you is to subscribe to the channel and put on your bell notifications for my channel. Aside from that, without further ado, let's get right into the video. So here is a daily chart of the SPY, and we have been monitoring this trend line here, the blue one, since April. We can see that it's been acting as resistance multiple times, here, here, and here, right? And the only times that we crossed above this level were at extremes. And once we did cross above this level, the two times, we fell very fast right afterward. Okay, so this is a very, very clear line of resistance that we're monitoring. And in this morning and yesterday's video, I also said that the resistance level on the SPY would be 427.24. So we clearly crossed above that, and we ended up hitting a new high all the way up to 427.65. So you could have bought calls as we crossed above that level, and you would have been profitable, right? So overall now, where do we go from here on the SPY? So this is a chart of the SPY, and I want to show you a daily chart from all the way back in July 1996. All right, so this trend line here, it's been acting as support multiple times from July 96 to October 98, and then the break of this level in 2001 signaled a short-term recession, right? And then again in May 2001, this acted as clear resistance, and then we broke down below, right? So now this year, that same level acted as resistance once more, but then once we broke above it, that was the sign that the SPY had enough strength to cross above $400. So as you can see, you know, because we crossed above this level, we had a huge gap up and we never traded at this level again. All right. So now, what I wanted to show you for that reason was that this trend line, right, it's not as important, but you can see that it is not as slanted and extreme in its angle. For example, you know, these two lines, right, they're much more, you know, upward. Right, but trend lines that aren't as extreme, right, like this one, it's more flat, right, it's not as, you know, sharp, and this blue one, right, it's not as sharp. So basically the whole point of me showing you that was when trend lines are not as sharply distinctive in either upward or downward, they are much more likely to hold as a longer term support and resistance level. Okay, so now on the SPY, we closed above this level, and it clearly acted as resistance multiple times, and we could not hold up above this level. So now the things to watch is that, yes, you know, we crossed above and we held above 427.24, but yet we did not close above this level more than once. See, on May 7th, we closed once, but then we closed right down below the next day. So what we need to watch is whether or not tomorrow we can close above this level as well. So this level for tomorrow is approximately going to be 427.45, right? So if we close above 427.45 again tomorrow, then it will be a pretty bullish sign that the SPY can continue on higher. Because again, this is not an extreme level. And it's not a sharp trend line, right? So yeah, that's basically it. We can see that the MACD is starting to become a bit overbought, right? But we can also see in the past, the MACD on the SPY has gone up much higher. For example, in April and all throughout here, right? You can see that the MACD is noticeably much higher than it has been, you know, than it is right now, right? So we can see that it's at, you know, down here, but in the past, it's been trading all the way up here. So there's still a lot more room to go on the SPY, potentially to the upside, right? The RSI is not even close to being overbought, which is another bullish sign. And we aren't yet trading outside of the upper level of the B band. So there's still a lot more room to go. The B band, it looks very sharp upwards, meaning that, you know, the momentum is there and it looks like it's going to continue on higher. But again, it all depends on whether or not we can remain above this trend line here and close above 427.45, right? So overall, the SPY looks very, very bullish. And yeah, for good reason. Cool. So that's the SPY. Next, I want to talk about the IWM. So the IWM failed its bull flag move, right? And today it was the biggest loser because most of the money went into the tech sector. And because the money went into the tech sector, they took money out of the IWM. And that, you know, essentially they just put their money into the winning indice. So there was no reason to put money into the IWM when the tech sector was outperforming, right? So I said that, you know, the level of support on the IWM was going to be 233.41, and 233.41 ended up breaking pretty perfectly. You could have bought puts. No, sorry, 233.41 was resistance. Sorry, 231.13 was the support. So 231.13 was this trend line here, and as we cross below it, you know, you could have made a lot of money today. The IWM went all the way down to 228.77. Okay, so yeah, there was that potential move. We can see that we failed to hold above this trend line, which is the upper level of the flag. So, you know, until we cross back above this level, then we're going to consider this a false breakout on the IWM. But, you know, again, if the SPY and the QQQ continue on higher, then the IWM is not going to, you know, do well. It doesn't make sense for, if you're an institution or a bank, it makes no sense to invest in a lagging indice when you can buy the momentum and make profit today on these winning indices, right? So that's basically what's going on in the minds of banks and hedge funds that are managing money. We can see that the MACD on the IWM is similar to the SPY. It's overbought, yet we have a red day, like a very big red day. We broke through multiple levels of support. Whereas on the SPY, we're also overbought, yet we broke upward on multiple levels of resistance. So it goes to show how powerful the SPY is to the upside, yet how weak potentially the IWM looks to the downside. Okay, so the next levels of support that we need to watch for tomorrow, you know, are definitely going to be the 20 exponential moving average. But more importantly, it's going to be today's low. So today is low at 228.77. And then obviously the most important level that we've really been watching is the 23.6% fib level at 228.08. So those two levels of support are going to be very, very important on the IWM moving forward. The levels of resistance for tomorrow, the most important one is going to be 231. So 231 is going to be the resistance. But, you know, to take into consideration, the RSI did fall very heavily. You know, so let's see if the IWM can consolidate a bit more above 228 and then move on higher afterward. But like I said, yeah, there's no reason for hedge funds and banks to invest in a losing indice. Anyway, so let's talk about the NASDAQ. Okay. All right. So here's a chart of the NASDAQ. And as you know, I like to watch the RSI and the MACD on my chart. Okay. And since the March 2020 low, every single time that the RSI has closed above 70, right? If you had bought puts for 2 to 3 months out, it would have been a 100% success rate trade. Okay? So as you can see, these past 4 dates, the RSI on the Qs were closed above 70 right here. So look at this number. These 4 lines, we closed above 70, which signals overbought. So when the RSI is overbought, it means that there is a lot of room to go to the downside. It means that momentum has slowed down and it's a very bearish signal. So the last 4 or 4 times, as you can see, if you had bought puts for 2 to 3 months out at the money, right, you would be profitable. So basically within 2 to 3 months, every single time that this has happened, the market falls in a profitable way for you. And that has been a 100% success rate trade for me since the March 2020 bottoms. It's happened multiple times, and every single time I made money. So the thing that we need to watch now is that it just happened again today. So today we closed above, we closed at 71.43, which obviously is above 70 on the RSI. So now what we need to watch is obviously the overall market is very, very strong. Bonds, all of the movement on the bonds specifically gave strength to the tech sector, which is another reason why the bank sector took a hit. Okay, so yeah, with all of those things considered, it's not a guaranteed trade because there are extremes currently in this instance that was completely different than the other instances before. But just technically, from a purely technical standpoint, it is a 100% success rate trade that has worked for me 4 out of 4 times in the past. So today, you know, buying puts for 2 to 3 months out based on the past has been a successful trade. So if you would have bought 353 puts, eventually within 2 to 3 months, the Qs would be trading below 353. So let's see if that holds true once more. Anyway, the NASDAQ, you know, clearly has ridiculous strength, right? Now we're pushing up against the upper level of the B band. And the last time we've pushed up above the upper level of the B band multiple times in succession was back in April. All right. So now we need to see if that continues happening because obviously the bond movement caused a lot of this. So let's see if we can continue on higher. And if we close above the upper level of the B band, if we close above the upper level of the B band, if the RSI is overbought and the MACD is overbought as well, those are multiple reasons to become bearish a bit on the market because we were beginning to become very overextended. So, for example, if you had bought puts here for 2 to 3 months out, we're trading outside of the upper level of the B band. Anywhere throughout here, you would have been profitable eventually within a month because the Qs went from 330 to 316. Okay, so similarly, something might happen similarly once more, but it's not an automatic signal to just short the market. We are still clearly trading in a beautiful uptrend. So the more safe trade, right? If you do want to go and buy puts instead of trying to call a top, what you can do and wait for a break of this trend line. So if we do end up going higher for like another day or two, right? And we end up, you know, retesting maybe even like 357, 360, right? And then we start falling. If we break down below this trend line, that's when I would go short. Okay? I wouldn't go short just blindly here because there's still so much more room to go to the upside. But I did buy puts, a very, very, very small amount of puts. But I do still believe that the market is going to continue on higher, and I wouldn't become aggressive to the short side unless we broke this trend line, which doesn't look like it's going to happen. But, you know, the RSI overbought is a bearish signal, as well as the MACD overbought. So, and the fact that we're trading above, we're looking to start trading above the upper level of the B band. So there's 3 bearish reasons essentially on the NASDAQ to take into consideration. All right. So this is a chart of the 30-year treasury bonds for the US, right? And it was very green today. So the reason why it was green was because overall analysts, basically this is an inflation trade. They're investing in the 30-year outlook of the US stock market instead of the shorter term, right? So because this is green, it took money out of value stocks, which is why the IWM fell, and it put money into growth stocks, which is why the tech sector led, right? And it's another reason why the dollar was also green. Okay, so the last time this happened, and the last time the dollar was rallying this heavily, right? It was a similar reason. It was because the bonds were doing well, which was another reason why the NASDAQ was doing well during this time as well. Okay, and another reason why the IWM was falling. Okay, so literally, you can put all of those charts back together. I'm just going to go backwards. Watch the Qs go up during this time, and the IWM go. The Qs go up. Bonds go up and the dollar go up, but the IWM fell. Okay, so Qs went up, dollar went up, bonds went up. Okay, but all of the money funneled out of value, which means that in the short term, they don't think that the inflation is going to rise anytime soon, like not immediately. You understand? Because it means that banks are not going to be able to charge a higher interest rate in the short term. So that is a huge blow to the bank's bottom line. And if there is a huge blow to the bank's bottom line, banks and the financial sector have a huge weight in the IWM. So if they don't do well, then the overall, IWM is not going to do well. So we could look at the XLF, which is the financial. Yeah. So the XLF was also red, obviously, right? So overall, banking stocks and everything didn't do well in conjunction with the dollar strength and the bond strength. Okay, so now the dollar continued strength. It consolidated above 91.6. We're oversold on the MACD. The RSI still has room to go to the upside, and it looks like the dollar is going to continue on higher, right? But in the past, usually when the dollar goes up, the stock market goes down. But right now, because the dollar and the bonds are moving in conjunction, so it looks to me now that when the dollar and the bonds are bullish, then that means that the tech sector is going to be bullish as well. But if, the latter, then we have to test and see whether or not, if the dollar and the bonds go down, will the tech stocks also fall? Okay, so we're just going to be keeping an eye on that as well. Overall, the NASDAQ, I wouldn't go short heavily unless we cross this trend line. The dollar looks bullish. The US 10-year outlook is bearish, but the 30-year outlook is bullish. Okay, so because the 30-year outlook, the chart I was showing before, because the 30-year outlook is bullish, that's why people were comfortable putting money into tech stocks. And because the 10-year outlook is bearish, that's why people took money out of bank stocks and the IWM, which is value related. Okay, so those are just things that I hope I did a good job explaining. I'll go a bit more in detail in the next video. If you guys want, just let me know. I hope I did a good job explaining. Just rewatch the video and you'll understand it better. So yeah, those were the overall indices. Now we can go into Bitcoin and the crypto market. So Bitcoin is still having trouble crossing above this trend line. So it still has yet to close above 35,500, which is basically this trend line today. Yeah. So honestly, Bitcoin, it can continue. All right, so look. We've created a large triangle on Bitcoin, all right? And from today onward, the range of this triangle is 40,000 to 32,000. So technically, we can cross above this level here, consolidate a bit, retest this blue trend line here, and then end up breaking downward again, failing at this resistance point, and then, consolidating a bit, and then crossing out above. But until Bitcoin, literally, I'm not going to speculate. There's no reason to be like, oh, yeah, I'm bullish here, I'm bearish there, blah, blah, blah. Yeah, look, unless we cross above this downtrend right here, we're not going to become bullish again. But definitely, we have to cross above this trend line here. So, look, if we don't cross above this trend line in the short term, then we can fall back even lower, end up falling down below 32,000 and then retesting new lows. One thing that I want to point out is that Bitcoin's RSI, MACD is overbought, yet it failed that resistance. But if you look at the MACD on the SPY, we were very oversold. We bounced out of oversold, breaking all of these levels of resistance and making a new all-time high. Whereas on Bitcoin, we were extremely oversold, similarly to the SPY, yet we literally did not cross any level of resistance, and we just continued bouncing around at this level. And we ended up becoming overbought. So generally, when you do become overbought on the B-bands, you know, it's bearish. It's a bearish signal. So it worked off of the oversold condition very, very poorly. And it's a bearish signal. So even on the short term here, you can see that it's creating a bear flag. On the longer term here, it's also a bear flag. Okay, so those are two very bearish signals. You know, patterns on Bitcoin. Also the fact that, you know, we're failing at these resistance points. Also the fact that the MACD is overbought. Okay, so those are things to keep your eye out on Bitcoin. And of course, if Bitcoin does not cross out above, then, you know, Ethereum is not going to cross above 2316 or 2341. You know, Litecoin, XLM, all of these other altcoins are not going to do well as long as Bitcoin is continuing to trade in this range. All right, it all depends on how Bitcoin does. We need Bitcoin to cross above 35,500 either today or tomorrow. It needs to cross above 35,600. Okay, so yeah, one other thing, if you don't want to, you know, draw out this trend line, we need to have it close above the 20 exponential moving average. So now we can see the 20 exponential moving average sort of acting in confluence with this trend line now. So yeah, we just have to keep monitoring those levels. But yeah, that's really it on the crypto market. That's it for the indices market. I went over that 100% trade. Now I'm going to go over the technical analysis on all of the stocks that you guys wanted me to do. So Nike. So it looks like Nike made a new all-time high recently, smashed earnings, and the levels of support that we need to watch on Nike are going to be 151.51 and 150.48. All right, as long as we can hold above those levels, then it looks like we can continue on higher. But because we had such a dramatic move upward, if we cross below 150.48, it would be potentially a good time to buy puts, because, you know, we have a gap all the way down to 134.82, and gaps usually tend to need to be filled. So that's just something to really watch on Nike. If we do fall below, then going short might be profitable. You know, because also the RSI is extremely overbought. The MACD is extremely overbought as well. It could be good for a potential reversal trade. GVO, we can see that the MACD is tightening up. We're oversold on the MACD as well. It's below that level, right? The RSI looks like it's crossing below 50, but we're holding above support. So we can see that GVO has clear levels of support at 762. That's held multiple times all throughout here, right? And it's acted as resistance, right? So 762 is a very important level for GVO. If that doesn't hold, then 713 needs to hold. Also, this looks like a bull flag, okay? Very similar to the IWM. But because the IWM fell, GVO most likely fell as well. So, yeah, it looks like a bull flag, but, you know, if the overall market and the IWM does not do well, then I don't think GVO will. But 762 is an important level of support. This looks very bullish. So we just need to see if these levels of support holds. If they do, then we can continue on higher on GVO. Beyond, I alerted Beyond on Twitter. Look how strong this is. So the MACD a few days ago was very oversold, right? And we did not even cross above yet. But you can also see this bull flag here, right? Very clearly. Sorry about that. Very clear bull flag here, right? We broke above that. We broke above it. Yet the MACD is not even overbought yet, which means that there is a lot more room to go to the upside potentially on Beyond, which is, you know, another reason why there was extreme strength today. The RSI is looking like it's about to become overbought, and it does look like, you know, if we continue on higher tomorrow, we're going to start trading outside of the upper level of the B band, which is 1 standard deviation away from the median level. So that is also a level of overextension. So that's a cause to be a bit weary going to the long side on Beyond. Okay. But overall, we might have another day or two of positive move. And then if we are very overextended outside of the B band, we can have a reversal back to these levels of support. But overall, right now, Beyond looks very, very strong to break out of a bull flag. And of course, AHT. So AHT, very similar to Beyond in the MACD, right? We haven't crossed above bullishly. We haven't crossed over yet. And it's a bad sign because AHT failed at the 20 exponential moving average, which was acting as resistance, right, yesterday as well. So today, you know, it didn't cross above 544, which was acting as resistance. The next level of support that we need to watch on AHT is 489. If we can hold above 489, then that would potentially be a bullish sign. But if we fall below it, especially if the MACD is crossing up above, then that is a very bearish sign, and it could point to potential, you know, breakdown even lower. So I would buy puts on AHT if we fall below 489. Okay, so I hope you guys enjoyed the video. And thanks for watching. I'll see you guys tomorrow. Thanks.